Have you ever looked into trading currencies online, Forex, and just stopped and thought, hang on, is this actually legal in India?
Yeah, it's a really common question.
Yeah,
And honestly, it's a smart one to ask.
definitely. Getting tangled up in financial regulations isn't something you want to do accidentally.
Exactly. There's this sort of cloud of uncertainty around Forex trading here.
Hmm.
A lot of people just assume it's all completely forbidden,
Right.
but the actual picture painted by the Reserve Bank of India, the RBI, it's more complex than just a straightforward yes or no.
So that's what we're diving into today.
Pretty much. We've gone through the regulations, the warnings, all of it to try and give you a really clear understanding.
What could get you into hot water?
And even some of those, let's say, creative ways some brokers try to get around the rules. Shady tactics, really.
Okay, so if you've ever thought about trading Forex, or maybe you're just, curious about how these financial rules work, this is for you.
Yeah, getting this right could genuinely save you from some serious trouble. We're breaking down the RBI rules, authorized versus unauthorized brokers, the whole deal.
Let's do it. So before we jump into the legal side, maybe we should just quickly nail down the basics. What is Forex trading, fundamentally?
Good starting point. Forex is just short for foreign exchange. It's essentially swapping one currency for another.
Like changing rupees into US dollars, USD.
Exactly. Or say euros for rupees, INR, that kind of thing. And interestingly, our sources mention that sometimes even gold or cryptocurrencies like Bitcoin get looped into Forex discussions.
Okay. And there was an example in the source, right, about making a profit.
Yeah, let's walk through that. Imagine the INR pair is trading at 90.50. So 1 euro costs 90.5 rupees.
Got it.
Now, let's say you think the euro is going to weaken against the rupee. So you decide to sell 10,000 euros at that 90.50 rate.
Okay, selling euros.
Then, imagine the rate drops, like you predicted, down to 89.50.
Ah, so the euro is worth less now.
Precisely. That difference, 90.50 minus 89.50, is 1 rupee. Multiply that by the 10,000 euros you traded.
That's a 10,000 profit.
Exactly. Simple calculation. 90.50, 89.50 times 10,000 equals 10,000 rupees.
Seems pretty straightforward when you put it like that. Shows the potential upside.
It does, but, and this is a big but, even in that simple example, there are hidden complexities. The source flags as real risks.
Like what?
Well, terms like spread. That's the difference between the buying and selling price, basically the broker's commission built in. Then there's leverage.
Ah, trading with borrowed money.
Right. It magnifies your potential gains, but crucially, it magnifies your potential losses too. And then margin calls.
That sounds ominous.
It can be. That's when your account balance isn't enough to cover potential losses on your leveraged trades, and the broker demands you deposit more funds, fast, or they close your positions at a loss.
Okay. So not understanding these terms is like walking into a minefield.
Pretty much. Which leads us neatly into the main question. What are the rules in India? What does the RBI actually say is legal?
And you mentioned the RBI is the key authority here.
Absolutely. They set the rules for Forex transactions. And here's the really critical part. The RBI has specifically permitted trading in only 4 currency pairs against the Indian rupee. Just 4.
Only 4. Okay, that's incredibly specific. It's not a free-for-all then.
Not at all. It's a very defined space, and you need to know these 4 pairs. They are USD INR.
US dollar rupee. Makes sense.
Euro rupee.
Euro rupee, okay.
GBP INR.
British pound rupee.
Then JPY NR.
Japanese yen rupee. So dollar, euro, pound, yen, all against the rupee.
That's it. Stick to those 4. Trade them through an authorized broker, and you're operating legally according to RBI guidelines.
And anything else.
Anything else is where you cross the line. Trading other pairs involving the rupee, or pairs that don't involve the rupee at all, like, say, Euro USD or GBP USD, that's illegal if you're based in India, and doing it through platforms not explicitly permitted for these specific activities.
Okay, and using unauthorized brokers is also a huge part of the illegality, right?
A massive part. This is where a lot of people get into trouble.
So let's be really clear on what to avoid. The source gave examples of illegal trading, like those international pairs, URUSD, GBP
Definite no-nos for retail traders in India under current rules. And the focus really needs to be on avoiding these unauthorized brokers.
Did the source name any?
It did. It specifically mentioned one called Glyn TDFX as an example of a broker not approved by the RBI.
Glyn TDFX. Okay.
And apparently, there's a whole list, something like 88 such entities flagged by authorities. We won't list them all, obviously.
No, but the point is there are many out there.
Exactly. And the big danger with these unauthorized platforms is the massively increased risk of scams. You have very little recourse if things go wrong.
And this isn't just theoretical risk, is it? The RBI takes action.
They do. The source highlights that just recently, October 2024, the RBI blacklisted 13 more Forex brokers.
13 more. Wow.
Yeah, and it named a couple from that list as examples, Ranger Capital and Yoker FX.
Ranger Capital, Yoker FX.
Trading through entities like these, ones on the RBI's alert list or blacklist, you're not just risking your money to potential fraud, you could actually face legal action yourself for violating FEMA regulations.
Okay, that's serious. Now, this part about loopholes sounds interesting and maybe a bit concerning. How are brokers apparently trying to get around these rules?
Right, it's quite clever in a way, but definitely risky for the user. Our source explains a few methods they use, basically to offer these technically illegal trading options to Indian clients, often just to earn brokerage fees.
So what are these methods? Let's call them dangerous shortcuts.
One common tactic is setting up offshore companies.
How does that work?
They register the brokerage firm in a country like Malta or Cyprus, maybe some other jurisdiction, where the RBI doesn't have direct oversight.
Ah, so technically outside India's regulatory reach.
Exactly. And then they might falsely market themselves as being regulated, maybe they are, but by an offshore authority, not the RBI, which is what matters for Indian residents.
And they might try to look legitimate.
Well, yeah. The source even mentioned the example of using celebrity endorsements. It cited Xness being promoted despite appearing on regulatory alert lists. It's about creating an illusion of safety. Think of it like offshore shell games.
Okay, so offshore registration is one trick. What else?
Another route mentioned is using crypto as a sort of gateway.
Crypto, how does that connect to Forex?
Well, the process described is you convert your Indian rupees, INR, into a cryptocurrency, often a stablecoin like USDT, which is pegged to the US dollar.
Okay, so INR to USDT.
Then you use that USDT on the platform to trade various foreign Forex pairs like the Euro USD we mentioned earlier. You're not directly using INR for those trades.
So it's like a workaround, a way to bypass the direct INR pairing rules.
That seems to be the idea. It's presented as a clear attempt to sidestep Indian Forex regulations. The source strongly advises against this. It's like taking a crypto detour around the law. Definitely not recommended.
Got it. And there was a third method, something called demat masking.
Yes, and the source used some pretty stark language here. It suggests some platforms, maybe even some that primarily look like stock or commodity trading platforms, might indirectly provide access to Forex derivatives.
Making it look like you're trading something else.
Potentially, yes. Masking the Forex derivative trading as if it were standard equity or commodity trading within your demat account framework. The source actually calls this kind of activity gambling and includes a pretty blunt warning. The government is after you if you get involved in this.
Wow, okay. Gambling, government scrutiny. That really paints a picture of high risk. These aren't loopholes, they're traps.
That seems to be the message, yes. Veiled equity plays, and the authorities are actively looking into them.
So given all these dangers and shady tactics, what is the safe, legal way to approach this if someone is interested?
Well, key is using regulated platforms that explicitly comply with Indian law. Our source points to Delta Exchange as one example of a platform that operates within the legal framework set by the RBI and other authorities.
Delta Exchange. Okay. And how do they manage to stay compliant according to the source? What makes them different?
There are a few key aspects highlighted. First, regarding crypto, which often comes up alongside Forex. Delta Exchange apparently doesn't involve direct custody of cryptocurrencies for users.
Meaning you don't actually buy and hold Bitcoin itself on their platform.
Correct. Instead, users are trading derivatives, essentially making bets on the price movements of assets like crypto or Forex pairs, without owning the underlying asset directly. This derivatives trading model itself is structured to be legally compliant in India.
Okay, that's one point. What else?
Second, they are registered with the Financial Intelligence Unit, the FIU.
FIU. That sounds important.
It is.
Right, compliance and transparency. Makes sense. Anything else about their model?
Yes, a really crucial point. Trades on Delta Exchange are settled in Indian rupees, INR.
Ah, INR settlement. Why is that significant?
It directly aligns with Indian tax regulations, like TDS tax deducted at source and overall RBI guidelines concerning rupee transactions. It keeps everything within the Indian financial system, making it much safer and legally sound for Indian users compared to offshore platforms dealing only in foreign currencies or crypto.
So easier tax compliance, too.
Potentially, yes. And finally, the source notes that as a regulated entity, Delta Exchange adheres to global financial standards, providing operational transparency, which helps prevent illicit activities and gives users a more secure environment.
Okay, so that paints a picture of how a compliant platform operates. Let's try and boil this all down. What are the absolute key takeaways for someone wanting to trade Forex safely in India?
The absolute number one takeaway, Forex trading itself isn't automatically illegal. But, and this is critical, it's only legal if you strictly follow the rules laid out by the RBI and SEBI. Rule number one, follow the rules. Got it.
Rule number 2, avoid offshore brokers and any platform not explicitly authorized or registered properly in India, especially those on RBI alert lists. That's just asking for trouble legally and financially.
Steer clear of the unauthorized players. What else?
Use platforms that are registered with the FIU. The source gave Delta Exchange and CoinDCX as examples of FIU-registered entities in the crypto derivative space.
Okay, FIU registration is a green flag.
And if you're trading through traditional brokers, make sure they are RBI approved and registered with the exchanges like NSE, BSE, and MCXSX. Examples mentioned were Zerodha and ICICI Securities.
Right, stick to the well-known regulated domestic brokers for exchange-traded pairs.
And the most crucial rule, maybe worth repeating one last time, only trade currency pairs against the Indian rupee.
Just those four we listed, USDNR, EUR, GBPNR, and JPONR.
Exactly. Trading anything else, especially through unofficial channels, is where you run into problems.
And the source had a final warning, didn't it, about enforcement? It did. A strong warning that the government is persistent and actively pursuing those who violate these Forex regulations. It's not something they're ignoring.
Okay. So wrapping this all up then, the big picture is Forex trading in India, yes, it can be legal.
But only under very specific RBI-defined conditions. Straying outside those lines is risky.
Understanding the rules, knowing which pairs are allowed, and critically, using only authorized, regulated, and preferably FIU-registered platforms, that's your shield.
Absolutely. It's about diligence and sticking to the legal path.
So here's something to think about after we finish. We've seen how the line between a smart trade and an illegal one in Forex really comes down to the fine print of regulation, right?
Definitely.
It makes you wonder, what other financial activities that seem straightforward on the surface might actually have these kinds of hidden regulatory complexities. Complexities that it's absolutely vital for you to understand before jumping in.
Yeah, that's definitely some food for thought. Regulation often has more layers than you first expect.